All right, good afternoon, everyone. Today is Wednesday, the 14th day of May, 2025. These were the results from last week's session. Now, last week was right after the FOMC, you may recall. So there was a lot of activity in that session. There were a lot more than 11 trades that triggered, and I took 11. Out of those 11 trades, the one that I did stop out on was a mistake. So we would have, if I hadn't taken that trade by accident, or mistakenly taken that trade, we would have had 10 out of 10 last week. It was 106 ticks per contract, but it was like 9,200 bucks is what it ended up being, which doesn't work out to 106 ticks with 10 contracts on, because two of those trades I did with one contract on accidentally, and I think that was 36 ticks worth or something like that with one contract, and the rest of it was 10 contracts on. Anyway, it was a good session last time. There is a free 4-day trial if you want to get into it. Go to actually right here tvtrades.com. The 4-day trial, you have to go to tvtrades.com/4days. Okay, that's all you have to do. It'd be like this: tvtrades.com/4days. There. That's all you have to do. And right here, click on $25 a week, $9 a month, $970 a year. All right. So let's get right into the stuff. These are the markets that I trade in the morning usually. All right, and I do it with like this. We'll switch that off and switch that on. Switch that off and put the TV trades on over here. Now, all I'm looking for when I'm trading, and all I'm going to be looking for in here right now, is is for the color to be right, the background color to be right, and for the trigger to be right. Okay, it's not a hard concept to grasp. It's really simple. There's a few other things that I want to go over today as well. Um, I want to go over the diamond principle today. Um, mm, is it possible to announce it in the time you are entering so that you can take it with me? I'll try. I'll try to do it that way. Um, for instance, right now on the NQ. All right. Right now on the NQ, I'm going to short right here. Okay. Now, the actual short should have been right here a minute ago, but it hasn't gone 20 ticks into profit yet. This has a 60 tick stop. It just stopped me out. This has a 60 tick stop on it, and it just stopped me out minus 60 ticks. But the actual trade on that would have been right here, all right, and it hadn't gone 20 ticks into profit yet. Now you see that just stopped me out. So the NQ has been. I haven't had my best day today. Let me say that. This morning I was up with 10 contracts on. I think I was up. Well, I can go tell you. With 10 contracts on, I was up $4,500 this morning. That was my third worst day this year, I think. Second worst day, something like that. But anyway, we just stopped out minus 60 on that one right there. Now that coming out of the overbought right there with a red background is what made that the valid trade. Okay, now obviously that didn't work out. Everything just gapped up right there for some reason. So you had a gap up there, a gap up there, and a gap up there. If it had gapped down, we'd have made 75 ticks, but it gapped up and we stopped out minus 60. Probably got some negative slippage on that too. But I'll do my best to help you out with that, Masood. Okay. Um, so, I mean, all we're looking for is that kind of a thing. Like right here, we're now in the oversold. We got to fill this gap right here. Futures usually fills gaps quickly. All right, so we'll probably fill that gap right now, and that's going to put us in a flat spot down here in the oversold. See, there's the flat spot. It's going to give us a flat spot down here in the oversold, and so we'll look for an entry when it comes out of the flat spot. All right, this is the NQ we're talking about right here. We'll look for an entry when it comes out of the flat spot. All right, over here on the ES, we have the same gap situation going on. We have the same flat spot going on. The Russell will probably end up with the same thing too. All right, it's not there yet. The Russell still has a red background, so it's still suggesting a shorting opportunities in here. Um, okay. So the ES actually right here on the ES, Masood, where it came out of the oversold. This isn't the greatest spot to trade, right? Because I still think it's going to fill this gap right here. But I want to get into the different types of trades that we do. whether you're doing an aggressive trade or a conservative trade. All right. Um, we have to fill this gap. Both of these guys need to fill this gap right here. It's giving me pause about taking the trades. I mean, there is a trade right here, right? Where it came out of the oversold right there. There's a trade right there. If it comes out of the oversold here on the NQ, that would be a valid trade as well. Here's the ES trade. Okay, we're going to go to break even on that. It should get up to the prior swing high, but I think it's going to pull back, so I'm just going to lock in a couple of ticks because I think it's going to pull back and fill that gap before it continues the trend at all. All right. The things that I want to talk about, I mean, I talked about it a little bit last week, and I'll talk about it again this week. The difference between the aggressive trade and the conservative trade, and also figuring out targets, because that was something that, let me see if he's in here right now. He's not in here right now, but one of our long-term subscribers, he texted me that he's having issues about making money, and then he keeps trading and he gives it back, and he's not letting things run. Is what his main complaint was. He's not letting things run, and he needs help finding targets or seeing where things should run to. All right. So there's many different ways to do that, but I'm going to show you some pretty simple ways to find targets when you're in a trade. You see, this is filling the gap up right here. This is too. This is slowly filling the gaps up. This one here is too. So when it fills the gap right here, we're probably possibly still going to be with a blue background on both of these. So we'll be able to look for a long trade coming out of that situation when it fills the gap and it comes out of the oversold. We'll probably get flat spots here on the bottom. Now, so you understand what creates the flat spot, because when you're trading using the trigger, right, any version of the trigger, whether you're using the optimized trigger, you're using this trigger, you're using any of the other things that have to do with the trigger, this blue line right here, the snipe line, we just filled the gap, and we just filled the gap there too. And we filled the gap on the Russell. The snipe line, which is this one right here. All right, if you go to properties in here, if you go to your properties, it is this one, our snipe. That's the line that really gives you all the triggers, right? It gives you other information too. If you have the password put in, you have the optimized trigger on, it'll give you more information, like leading into a trade. It'll tell you that the next bar is likely to be the trade and all that. But John, sorry you missed. Why was there even? I don't know why there was a gap. I don't know why there was a gap there. I could go and check the news events, but I'm not really sure why there's a gap there. But coming out of the gap right there on the NQ is an opportunity. All right, now that it's filled the gap, it's an opportunity there. This is also 100% retracement of this leg right here. Okay, so it's an opportunity to get into a trade right there if you want to. Excuse me. Let me say that again. Masood, that right there is an opportunity to get into a trade. Okay, now this has got to hit 50 for me to bump the stop to break even. Okay, when that hits 50, I'll bump the stop to break even. It should do it pretty easily here, pretty handily. There's almost 47 and a half. It was there again. There it is. So now my stop's at break even. Okay. Now, I stopped out minus 20 ticks on that very first trade, so I'm going to lock in a little bit on this. All right, I'm in at 66. Now I got my stop at plus 1 point. Now, when I grab this right here, just so you guys know, when I grab this right here, as long as I don't let go of it, my stop is still down there at plus 1 point. Right, but I'm in at 66 right here, and if I just drop it right there, now it's at plus 6 points or 24 ticks right there. Okay, it should go all the way up to the swing high here and give me all 75 ticks. 75 is all the way up here at 84.75. Okay, and it should give me all of that and then some. But we have our stop right there at plus 24 if it doesn't. Okay. I'm just going to let it go. So we could have taken an ES trade over here at the same time, right here where the ES came out of the oversold. actually this had a red background. This changed to a red background, so that wouldn't have been the optimal trade right there. This having the red background suggests that it's going to go down, and that suggests that this is probably not going to make it much further up. So we'll probably get the 24 ticks here. All right, so let me write down the trades that I have taken, because last week I had actually had to go back and rewatch the video to see. But so far we have one NQ for minus 60, and then another one for 24, so that puts us at minus 36 at this point. We'll put that over here now. The ES actually had a trade, right? It did not have a trade. I'm sorry, I keep saying that. It did not have a trade, but right now the background is red. So a down close on this is actually a pretty good spot to trade it. Now let me explain why. Okay. This right here, is the leg length that you're dealing with for the short, right? So a down close on this is going to put you right here at the 50% retracement of that leg length. That is a good spot for it to find resistance when it's coming back up. That's a good spot for it to find resistance right there, okay? So if you want to have a sell stop limit on, Masood, if you want to have a sell stop limit on, be 1275 down to 1075 right now, okay? Like this, all right? I know you would ask me to let you know. Well, there it is. Okay, 1275 down to 1075. If this ends up closing up, it's still going to be an okay trade to take, but the number changes, right? So now it's 13 down to 11. Okay, 8 ticks from the top is what you want to sell in this case, because it's a 7-tick range. All right, over here we did take some profit on that. It hasn't gone any further there, so we're not going to be really looking to do anything else on that right now. Okay, so this went up even further, and this is now not that attractive of a trade. I'm going to cancel it right now. Okay, and I'm going to slide it off to the side now. The reason that's not as attractive of a trade, well, now it's a little better now. It's hit the 100% retracement of this leg down. Okay, now let me explain that. You're using rhythmic. You are using rhythmic and the NQJ that gapped up. I don't know what to say about that. I don't use rhythmic. Okay. Alright, so now it's switched back to blue over here. So we don't have a trade here on the short side anymore. Okay. Please explain why the ES was not good anymore. I will. It's a fair question. Let's take a look at it like this, okay? Let me spread it out. And let me shut something off in here for a sec. It's on this side. Is that it? No, that wasn't. Yeah, that was it. Okay, that was it. I want to shut those off for a second so you can see it a little bit easier. When it was looking like it was going to give me a trade opportunity right here at the midpoint at the 50% retracement. That looked attractive to me, right? Because if I could have gotten a short opportunity there at that 50% retracement level, then it should have pushed down another leg length like this big. You know, the markets are always doing the same thing, right? They're always going down and then they pull back up. And then they go down and then they pull back up. And the pullback should be about that big, right? When it pulls back, it should be about that big, which should put it right about there. If it's bigger than that, it shows weakness on the downside and strength, a possible turnaround point. All right. So then, if you get your order on in here somewhere, like let's say you get up here and you put your order on here. Now the next level of resistance above this right here is this right here, the 100% retracement, right? That's the next level of resistance from down here. The first level is right here, where this position right here is. All right. That becomes your first level of resistance. If it goes through that first level, the next level is here. These swing highs and lows, just so you understand, these swing highs and lows are there for a reason. They're there because there's buyers and sellers at that point. All right. Use those for target areas. Use those for entry areas and target areas. You don't want to have your stop at that area. All right. You don't want to have your stop in between here and here, So if you were shorting, like let's say you ended up shorting right here, right, and it's showing weakness on the downside, your stop is going to be between here and the 100% retracement level. The next level of resistance, your stop is going to be between there and there. If you short here, down here anywhere, if you short down here anywhere, and your entry is below here, then your stop is right here. It's reasonably close, so your stop is right here. So the next level of resistance is right here, and it's going to push you down, right? But if you're above the next level of resistance where you're entering, then your stop is going to be up here before the next level of resistance. So you're probably going to hit your stop while it tries to get up to that next level of resistance. Now, when I was talking about this is the ES, right? So let's remove the ES DOM and we'll look at the numbers in the ES DOM. You don't really have any. This number right here at 5920, you see how that number has 117 at it? And if you look on the downside, there's not really anything showing there on the downside. But this number right here at 5920 that's got 117 at it, that is probably a pivot point. Well, it's not right here, it's up here at 5920. But let's go back and see if it does hit a pivot. Right, 5920. Let's crunch it up. There it is right there, 5920, 5920. The reason it is a pivot there is because there's a lot of buyers or sellers. The market is attracted to that. You don't want to have your stop at a point that the market is attracted to. Okay. So when you put a trade on, that became less attractive. The question was, why did I think that was a less attractive trade? It was because if I took the trade here, my entry was above this, which was resistance but could now act as support, and my stop is before the closest resistance. So if you're entering the trade somewhere in the middle of this right here, you might find resistance right here. I'm sorry, you might find support right here and resistance up here. So if you enter here, your nearest level of support is here, and your stop is right here before the nearest level of resistance. So there's a good chance that it's going to go up and it's going to hit your stop while it approaches this area of resistance, like up here, this area of resistance right here. Okay, that's why I was saying if we got it right here, it wouldn't have been that attractive. It wouldn't have been that attractive of a trade to me. As it turned out, it was the down close of this bar right here. So your stop would have been right there at the 100%, just a little above the 100%. That was not that bad to take it right there, but your area of support is right here, and you see it's finding support right there. So from here to here, you would have to get your stop to break even, and you would have very little opportunity to take profit. Okay, that's a good question. And now the question that was asked to me earlier, but was asked to me in an email actually, was about targets. All right, and this kind of goes toward the diamond principle thing that some of you may have heard of, you may not have heard of, but using the same logic of price action, okay, and this is my term, the diamond principle is my term, but using the same logic with price action, right? Price is going down and it goes up, and then it goes down again, and then it goes up again, and you expect the same thing to happen, right? And so a diamond is nothing more than two triangles, right? It's two triangles on top of each other, right? Like that. So the information that you get when you have this is you have a price element and a time element, right? And that should repeat itself. This price element and this time element should repeat itself. The price element should be this, and the time element should be this. Okay? So this, if you had a situation like this, it should eventually, in this amount of time, get you down to this level right here. So when you're thinking about targets, background goes back and forth, red and blue. Hang on, Daryl. Just use patience for yeah. If you're in a trade, don't exit it because the background color changes. If you're in a trade, stay in it until it gets to where you expect it to go. All right. If the background color changes while you're in a trade, don't exit the trade just because the background color changed. Okay. Daryl, I got to come back to you in a minute. Okay. But if you're in a trade, the first area that it should go to is the prior area of support resistance. If you're in a short, for instance, like everything that I just drew right here, if you're in a short, for instance, your first area of support would be the prior swing low, will be the first area of support that you should be looking for, right? That should be your first target. In a lot of cases, that's going to be enough to get the goal for the day, right? If you want to stay in the trade longer, then it's probably going to find support there, and it's probably going to pull back. Now, it probably won't pull all the way back up here. It doesn't usually pull all the way back up and do that 100% retracement, but it's probably going to pull back pretty good. And if you're a scalper, like I am, then you're going to exit here and you're going to enter again there, and take advantage of that, instead of just staying in it from here up to here and then down to here, because there's no guarantee that it's going to stop when it pulls back here. So you take the profit here that you have, then you take it again when you can get it here, if you can get it there. But you don't lose any when it pulls back, right? That's the way that I trade. Now, that said, if you want to hold on for the longer period, it gives you this information, this price element right here, all right? It gives you this every time, this little bit right here, right? It gives you that piece every time, and you should expect it to double that piece at least one time. If you're in a strong trend, you might get 2 or 3 times that. But that's the first one, and then the next one should do the same thing. And when the pullbacks start to get longer, and that goes back, Wayne, to that trade that we just took that you asked me about, the trade that I didn't take, actually, that you asked me about. When the pullbacks get bigger, like it goes down like that, and the first pullback is like this, and then it goes down like that, so it doesn't go down quite as much. The distance between here and here and here is less, and then the pullback gets bigger than this pullback. Like the distance between here and here, and the distance between here and here is bigger. The pullback is bigger. That shows weakness in the trend, right? If the push down is less and the pullback is bigger, it shows weakness in the trend, and eventually it's going to be higher than that, and it's going to be a trend change. It's going to go like that, right? That stuff's not hard to see. It's not hard to find. It's not hard to see. And when you're trading, when I'm trading, let's go all the way to the end right here. All right. So when this happened right here, all right, it showed weakness. I said this right here, since it pulled this far back, this was going to act as support, or likely to act as support, and look what it's done. It's completely acted as support. It's pushed it back up, and now you're in blue with the background right there. So this isn't really a great place to be trading. But if you were trading right here, the blue background, when you have a blue background, you're doing these retracement lines from the swing low to the swing high, all right, when you have a blue background. So it just turned to blue, but you don't have a swing low in here yet, so you have to use this swing low right here, Daryl. This goes to what you were asking me the other day, all right? If you're not, like if you're using this and you're above that, then you're going to be using the swing lows for your starting point. But if you're not using that, all right, if you're using the background color, you got to use the swing low for your starting point for the retracements. Okay, so like right now that it's blue, you get rid of this, right, and you start over again from right here. This is your swing low. This is your retracement level. This is a 50% mark right here. So, it's already pulled down into this right now. If you got a down close on this, now this goes back to what I was saying a few minutes ago about the bar lengths and all that stuff. If you get a down close on this, it's going to put this down into the oversold. Now you could be aggressive right here and just buy right there, be aggressive and just buy the open of the next bar when it closes down right here. That'd be an aggressive trade. If this does go down into the oversold, and it probably will, then you just buy the open of the next bar because it's at a good point for it to bounce. Okay, it's not perfect because it's below it right now. So, your first area of resistance is going to be, is right up above you. I'm sorry, where the heck is it? Your first area of resistance is right up above you. See, this is better. Now that you're down, all the way down here, this is better. Because I was saying the first area of resistance is right above you, and the area where you want your stop, if you entered right here, your stop would have been probably down here at 508 somewhere. It'd be on the other side of that, so it's not too bad. But it's jammed up pretty tight in here. So this is 100% retracement. Right now, if it comes out, this would be the conservative long trade. Right there it is, conservative long trade, and here it is, conservative long trade. All right, and so I'm in it, and it's got to go 4 ticks into profit for me to bump the stop to break even. It's going to go 1 more tick. All right, I'm in at 10.5. I think that's exactly right, isn't it? Oh, it's actually 1 tick better. Okay, so it's going to get up to 11.5 here for me to bump that stop to break even. Looks like it's already gotten there once, so I probably should have bumped it already. What should it do though? I know the background just changed color on me there. Sorry, I didn't realize that when I took the trade. But it should still go up enough to bump the stop to break even. One more tick. One more tick. Get up there. This is what I was saying earlier. When the background color changes when you're in the trade, play it out. Alright. Now, the background color changed when I actually got into the trade, so I shouldn't actually let this one play out. Alright, I'm just going to get out of this at break even because it was a mistake for me to take that trade right there. I wasn't paying attention to the background color. Alright. So it should actually move up from here. Just a regular price action, it should move up from here, but I didn't notice that the background color changed. I was too busy in my explanation to really realize that. Alright. So that's the yes. It's in a little bit of chop right here. Let's move off the yes right now, and we'll go to something else that may not be in chop. Gold has been pretty good today, and gold right now, well, right here it's you would go from here to here is what you draw, right? Oops, I don't mean that. This guy. From the last time it was in the overbought to this time that it's in the overbought. You find the high and the low between there. So that's what your retracement is looking like. So in here, this is what I was talking about earlier, right? You're already in the overbought. You're not going to be there at the midpoint when the bar closes up. So you're going to have a flat spot and take the conservative trade, all right? That's what's going to happen here. If this bar closes up, you're going to end up with a flat spot here and take the conservative trade where it comes out of the overbought. That's what would happen, all right? Now, you could still take the conservative trade right now. It's not the best place to take the conservative trade because your stop's going to be right here. But if you wait for a little bit of a pullback, then your stop would be on the other side of that, and that would be an okay place to trade it. All right? Does that make sense? It may just go down without us, and if it does, it does. All right, this is gold, so it's only going to go 5 ticks into profit before I would move my stop to break even. So it's gone from 0.7 down to 0.3. That's only 4 ticks. So there's still a chance you could take this trade. All right, on a pullback in here, where your stop would be up here. It's got a 15 tick stop on a 9 range. So just keep that in mind. 7.2 or above would probably be okay to enter. But if this drops down one more tick, then I'm not going to take it. Alright, it's just not the optimal place. There's one more tick, so I'm not going to take the trade. It's just not the optimal place to take the trade. What you should have here is a leg length like this big right now. Okay, that's what you should have. If it doesn't go through the prior swing low, then it's showing weakness, and you're not going to want to take the trade anyway. You're not going to want to trade in that direction anyway. Alright. So far, I've had one trade by accident on the ES. I've had 2 on the NQ, 1 win and 1 stop. And that's all we've done. But we've had good opportunity to evaluate the trades as they come along, haven't we? Instead of break even at plus 4 ticks, why not plus 1 at plus 5 ticks? You can do whatever you want with that, Larry. That's up to you. Is the risk management stuff, I give you a guideline, what's worked for me over the years. But you can, if you want to go to plus 1 tick at 5 ticks instead of break even at 4 ticks, that's totally up to you. Okay. But you see this right here, the red? That is just a plain indication from the TV trades that says, you should go short here. And all these red bars here with the blue background were suggesting that it was gonna, actually those are not it. If you had the bar colors on, it would have probably given you ahead of time, a little notice ahead of time if I turned that on. I think I have them shut off in here. Yeah, the bar color right here. Yeah, so it would have given you the warning ahead of time, 2 bars ahead of time, letting you know that a short was coming. Okay. Now, if that is the type of trade that you're taking, if you're just taking the regular TV trades, longs and shorts, as they are right here, and the fellow that asked me about the target thing in the email, that's what he's doing. That's all he's been doing ever since, ever since he's been doing it. He's been using the TV trades for a long time. If that's what you're doing, then you have to look at the prior swing highs and lows for target areas. Okay. Like if you had this right here, the first area that you should find support would be right here. And then the next area would be down here. There is actually something in the sniper. If I put the sniper on here, that does all that for you when it loads up. Okay, now you can shut off all the other things on the sniper, so you're not confused by the bar colors and all that. The buy sell area is the same. That's why it gets so dark. The buy sell area is exactly the same. But you can turn on the target lines right here. Okay, if you turn on the target lines, then it gives you the targets like that. Right, and it looks left for you to find the targets, and it'll paint it right on the chart for you. Okay, if you want to do the larger time frame things, it does it for you. So it actually puts it all up here too. All the target information is right up there. So if you're taking trades like this, you ought to be looking for larger targets, and your risk management is going to have to be different than the stuff that I'm using, because what I'm doing is for scalping. The risk management that I use, if you go here to targetviewtrades.com and you go to more and down here to risk management, for the scalping that I do, this is the risk management that I use. Okay, but if you're using the sniper and you're using larger time frames and you're using these targets, because the targets should be about the same on a larger time frame. This is the NQ on a 50 range, but if you look at it on the 100 range, well, is it still painting it? No, it's not. I don't know where the targets are on this. It hasn't drawn the target lines yet. Anyway, if you go back here to the 47 range, this is the bigger picture targets, right? If you want to use them, then that is one way you can have the targets painted on there for you. If you're not using that, then you just have to look left manually, all right? This is right here, gave you this information right here to go short. The first level I would look for support would be right there. Then the next level would be right here. And the next level would be right here. Okay. The targets actually, the sniper actually uses pivot points to go back and find the different pivot points for you. It actually paints those for you too, if you want it to. I haven't looked at the sniper in a while, it seems like. Alright, so let's put the NQ back and see if we have anything else in here that's going to give us any trades. The ES has sort of gotten out of that junk that it was in, but it's just right in here. Now, this is the kind of really aggressive chop that I was talking about earlier. If it gets like this, you can actually just shut the background color off. And you can go in here into this. I don't have the password in here, but you can turn on the equivalent of that. And then you can just trade when the blue leads into the overbought or into the oversold, or the snipe leads into the overbought or into the oversold. You can just trade then. Like if it leads into the overbought without the black, you'd sell the open of the next bar. If it leads into the oversold without the black, you buy the open of the next bar. Right, you can only do that when it's really aggressive like this, but you can see right here it hasn't given a single trade in that. The idea okay, what I just did to turn that on is too fast. Okay, well, let me just shut that off for right now anyway. Alright, we'll just go back to this. So let me slow down. Wayne was saying I'm talking too fast. Okay, so let me slow down. I'll put this back on. Right, now there are different, if you get a little blank spot like that, just flip to a different time frame and flip back. Okay, you should not have blank spots within the color background like that. The aggressive trade, when you get choppy like this, the aggressive trade with the trend, you'd only be looking for shorts, and you'd sell anytime it goes into the overbought. Alright, if it's choppy like this and you're and you're trading aggressively with the trend. Like right now, if we got an up close on this and the background stays red, and this closes up in the overbought, just sell the open of the next bar. That's the aggressive trade with the trend. All right, this is the ES right now. A minute ago, we were looking at the NQ. You'd be doing the same thing with that. All right, but this isn't really choppy. The ES is choppy, so you wouldn't do that with the NQ right now. But if it were choppy, like gold is choppy right here. So we've got an up close here on gold. There it is on the ES. It stayed red, so you could just sell the open of the next bar right there. All right, just like that. Sell the open of the next bar. That's an aggressive short right there. All right. Now the same risk management strategy is in place for that. Okay, stop goes to break even after 4 ticks in profit. So, and let's go over here. All right. All right. So we're watching this to give us 4 ticks in profit right now. Okay. And we're waiting. The gold actually has a similar thing going on here, and the gold's actually in profit right now. The ES is going up, not down right now, but we're still waiting. Okay, it hasn't gone 4 ticks. It's gone 3 ticks into profit, but not 4. So we're waiting to see if it's going to come around to that. There's 2, there's 3, one more. There it goes. Stop to break even. Now I'm going to lock in 4 and 6, 8, and we're out with 8 there. Okay. And that was an aggressive short in the chop. But now the leg lengths are too big to be aggressive anymore on that. Alright. Now because those leg lengths are now 3 bar lengths, 4 bar lengths here, it's too big to be aggressive anymore. So now you got to go with the conservative trade, which is still an easy trade to take. Okay, in that case we shorted the open of that bar, this bar right here, we shorted the open of that bar, but this we're not going to do because we're right in the middle, we're not going to do anything right there. But if it went into the overbought there, we would sell when it comes out of the overbought. Alright. The aggressive, that's what it was, Wayne. When you're being aggressive, trading in chop like that, and you're being aggressive, then you sell as soon as it goes into the overbought. Alright, conservative is when you sell when it comes out of the overbought. Alright, you don't want to be conservative when you're in chop, you want to be conservative when you're trending. But this isn't really trending right here. Okay, that's the difference. Alright. It's not a hard transition to make, and if we were just doing one market, you know, if you're just staring at one market, just staring at one market, it's not a hard transition to make. And see, what happened is it went down here, and then it pulled up, and then it went down, it went up and down, and up and down, up and down. So in that up and down right here, there's a chance for you to make some money. Alright, there's a chance for you to make some money. So the way that this has worked right now, you still be looking. I'm going to get rid of this, alright, because you have a red background. So you're drawing from the top down, so you're going from here to here is actually the retracement, right? It can be from, not there, it's going to be from, sorry, that's not the right place. It's going to be from here down to, well, now down to here is where it's going to be, right? So this bar here is not where you want to short because you have support right here, and your stops can be right up above that 100% retracement. So if you hit this and it gives you, it acts as resistance and it gives you a short off of that, that's a possibility. But shorting right here, right now, is not a good spot. Okay. Let me bump that to the side and see what's going on over here with the gold. The gold flipped directions here completely. It didn't come out of the overbought. It changed directions on us. This moved down, but it did not move down significantly yet. The prior swing low, the first one to look at was right here, right? And it did hit that. It bounced off that. Now the next one is down here. So if you just start looking left on this, this was the first spot. This right here is the next spot, but that's so close it's not really significant. That would be the next spot. And that would be the final spot that you'd look for. If you're just taking the red arrows, and this is for you one who emailed me that thing about the targets. This would be your first target, this would be your second target, this would be your third target. Okay. Now, using the diamond principle that I described to you earlier, right in here, let's blow this up a little bit so you can see it. If you're using that same principle, it's dragged out quite a bit in here. But if you're using the same principle, then it would go like this, right? From here up to here, and then all the way over to here. It's not really a very pretty looking thing. It hasn't actually even completed it yet because it have to go down through this level to actually complete it. So it hasn't really even completed it yet. You know, it's really messy the way things are running right now, and it's been this way all day, really. It hasn't been easy to trade today compared to last week when it was really pretty easy. Or most of the days this week have been pretty easy, but today is not. Alright, so let's look here. On the Russell right now, we're not really going anywhere. We don't have any direction on the Russell. The gold has some direction. It gave you this right here, right? So let's get rid of this, and we'll just look at the gold alone right now. Okay, so we filled that gap up. Looking at the bigger picture on this, you're drawn from here to here, from right here up to here. Okay, so this is your pullback spot. So if you get a down close on this bar, you'd be pretty close to the point where you'd want to have a trade. But it's just not quite there yet. Alright. And you know, the markets, when you were in this trend right here, it was going pretty well. But this retracement, if you crunch it up like this, this was the leg down and this is the leg up. That's not quite high enough. I'd expect it's going to go a little higher than that. Okay, so this was the down close. Now you're in the oversold. This isn't the greatest spot to be aggressive with this. I'd rather see it go down a little bit more and then give you an up close here. Okay. Why not the 31.77 as the low? You're talking about this one over here, right? This one. What I was looking at here was when it came out of the oversold, right? The last time it came out of the oversold and then went back into the oversold. That's what I'm grabbing right there, Rob. Okay, for the retracement. From here to here is what I'm looking at. Okay, you could do from here to here for this portion right here before you got that part over there. It'd be from here to here. Alright, so it's the high and low between those 2 points. Right, between that point there and that point. If you look down here at the bottom, between this point here where it came out and this point here where it went back in, the high and the low between those 2 points is what you're looking at. So it'll pull back completely to 50% right there, exactly to 50%. And this one right here, the way this is working out, it pulled back kind of deep right here. If it gives you an up close right now, it's going to be right there, right below the 50% mark, right? So your stop is going to be right here, right before the 100% mark. It's an okay trade. It's not the greatest trade. It's an okay trade to take. I'll take it just because, well, it's an okay trade. 73.6. Sorry, what am I looking at? What market is this? Gold. Okay. 73.6 up to 74.6 is what you're looking at there. I think. Just make sure that's the low on that bar. Low is 73.6, yes. Okay. But that's why you would use that point instead of this point over here. You would use that point where it came out of the oversold to where it went back into the oversold. So now it would be a conservative trade, and it's not a trade at all. So I'm going to cancel the order. There's the order, right? I'm just going to cancel it. And the background color just changed. So we'll go look at another market right now. right? The ES gave this. Now, with this right here, E1, you'd be looking for your targets, right? Looking for new targets. And your first target be right here, your next target be right there, your next target be right there. Those are the 3 targets that you have now. I'm going to use the other ones here that we just had a minute ago. So your first target from here would be right up here, right? That'd be your first target. Your next target would be right there. Then your next target would be all the way over here. Right? If you're using this, then that's how you have to think. Right? So the points are always from oversold to oversold and vice versa. Yes. When you're picking your retracement points, depending on what direction you're going in. All right, if you're going, let me come back. Let me go back there so I can explain it to you better with a visual representation. It was gold that we're looking at, right? So, if you have a red background, you're looking for it coming out of the overbought and going back into the overbought is what you're looking for, right? Coming out of the overbought, going back into the overbought, right? So this right here, when the background changes color in the middle like that, then you have to switch it around mentally. You have to switch it around, okay? But like right here, when it's all red background like this, you're going from when it came out of the overbought to when it went back into the overbought, the high and the low in that area, in between those 2 points, the high and the low, okay? And if you get to a point, like let's get rid of this for a second, or even right now is a good one. See right here where it switched background color? Right here just changed from red to blue. So right here, at this point, when it's red, you're drawing from the top down, right? So you had been drawing from here down to here. Once it turned red, you've been drawing from here down to here. When it was blue, you were drawing from here up to here, right? But then it turned red on the pullback, so it changed directions on you. So now you're drawing from here up to here. And now it's blue again, so now you're going to be drawing, when it turned red, you were drawing from here down to there. When it turns blue, you're going to be drawing from down here up to here. Oh, wow, that is confusing. I can see how that would be confusing to you. All right. So when you have a blue background, you draw from the most recent lowest swing to where it goes back in. So right over here, we don't know what this high is going to be yet, but we'll know when this gets down into the oversold, we'll know what the high is going to be. But this is the low that you're going from. All right. When it gets down into the oversold right now, we'll know it's going to take 2 bars to get down into the oversold. So this is the first one. And the next one could be a down close right here on this bar. And then the one after that would be right here at the 50% mark. Okay, so that might be a good spot. Right, because it's got a blue background, you're looking for a 50% pullback to go long. Okay. Yeah, you can put the yellow arrows on if you want to help make it a little bit easier. Okay, if you put these on, it helps to make it a little bit easier. Right, when this goes into the oversold, it's going to give you another arrow. Okay. But you can put that on if you want to help make it a little, and to show you where that is, it's right here, the trigger alert notice. Right, that's usually going to show you when it goes into the overbought or when it goes into the oversold with the right background color. It's usually going to show you that. Best look on a trade that I take every time. Well, what I like to see on a trade, I take most of the trades when they trigger, but this one right here is a good one. Okay, right here when you got all blue in the background, everything is all blue in the background, right? And this is what you'd be looking at. This is right here. Actually, it's not right there. Sorry, I thought that was going to be a good one. This isn't really a good one either. I'm trying to find a really good one that everything came together right. That's what I'm telling you. Today was not really easy to trade. Let's see. These are some of the trades that I took today. Are these today? Today's the 14th. Yeah, these are some of the trades that I took. Alright, so like right in here, where the retracement was from here down to here. and I took a short right here. I took an aggressive short right here where it went into the overbought right in here. That should be right there. Where it went into the overbought right in there. I took the aggressive short and I shorted when it went in there. That's a good trade to take pretty much every time. All right, it's at the 50% retracement. It went into the overbought when it hit, well, I think I missed that one up, but it went into the overbought when it hit the retracement and when it hit the 50% retracement. That is a trade that I'll take pretty much every time. If you look at this one right here, I think. Now, mind you, I was using the YBR when I was doing this morning, so these match up pretty well. But right here, where this is the retracement, right? It came back up, it hit the 50% retracement right here where it went into the overbought. Now, I don't know what time that was, but I ended up not taking that one this morning. But this is a trade right here that I would take every time. Right here. Okay. That is, the question was, show me a trade that you would take every time. That is one that I take every time. When you have the opportunity to take a trade, when it hits the 50% retracement, whether, I mean, for me, I like to hit the 50% retracement when it goes into it. Right, so you can be aggressive on that trade. Right, Ricky. So I don't see any of those setting up right now, but the markets, like I said, they haven't been great today. This is pretty good right here, the way this one's set up. Now you wouldn't have been looking for a long trade in here. You would have been looking for a short trade. But the way this set up, this is what you would have ended up drawing right here, right? It didn't actually go into the oversold, but if it would have gone into the oversold right here, when it hit the 50% retracement, you could have bought the open of that bar right there. If it would have gone into the oversold on the down close, that would have been a good spot. Right? The way that this is working out right here with the ES, you're drawing your retracement like that. It could turn out that you could get a retracement up to here. This gives a down close, it's just going to mess things up. But it could turn out that if it gives you a retracement up to here, and you go into the overbought at that time, that would be a good spot to trade. But as it is, it's just not. But the markets have been, they have been crap all day. I did not have a good morning this morning, and I was okay. I was still up $450 a contract, but it took me 6 minutes and 3 trades to get my goal this morning. And the first two trades that I took, both of the first two trades that I took, went to the point where I would have gotten my goal on each one, but I didn't move fast enough. I only got one tick on one, and I got no ticks on the second one. All right, so this right here isn't too bad right here. See, we're not in the overbought, though. We're going to have the up close here, and then a down close on this. Let me draw that for you. Well, this is kind of messy, because it starts way up here. All right. It didn't put you into the overbought position. it didn't put you into the overbought position here, so you're not ending up with anything there. Now, if I do this, let's just get rid of everything on the charts, okay, except the slingshot down there at the bottom. Not the slingshot, but that. All right. Now let me go to some place where I wasn't trading, like in the wee hours of the morning, where I don't have anything on the charts at all. Okay, like this. It's 3 o'clock in the morning, and the European markets just opened up. Okay, it doesn't really matter. The chart patterns are the same. Okay, so right here. Now, not having the background color, I'm just going to be looking at price action. Okay, and the way that price is acting. So right here, it went up here, it came down, put in a little bit lower swing here. It didn't put in a higher swing. There. So what this is showing you right now is it's showing you weakness in the market. Okay, what just happened right here in this little bit of market that I'm looking at right here, what just happened is, come on, man, you had this. All right, that shows weakness in the market. So down here is the level right here. That is going to be your support level. That's important at this point, right? And this right up here is going to be your resistance level. That and that are going to be the two resistance levels that are important. If this does turn into a downtrend, because you were in an uptrend, right? It went up, it down, up. Then it gave a deeper retracement. That's what I was just saying a few minutes ago. The deeper retracement with the shorter push, right? So you had longer legs up and bigger legs back. So this getting down below here actually turns the trend down. And if it does not pull up above this level, then that confirms that you're in a downtrend. All right. So without having any background color to tell you this, right? Without having that crutch. When you got into the overbought right here, this is an area right here where you could sell the open of the next bar. Do you get that? You could sell the open of the next bar right here because it's showing lower highs and lower lows. You're in a downtrend right here. So you could sell the open of the next bar. Right? Now, without having the 50% retracement drawn here, you would be right at the 50% retracement right here without having it drawn, because you would be going from here, I think, right? I should be going from the overbought to the overbought. This would be 100% retracement right here. 50% would be right in here, because it'd be going from this high to this low. Right here, this high to this low. So this would be the 50% mark, and this would be 100% mark. So it would be an okay place to trade right here, because your stop would be above it. Okay, without having the background color, this is just using plain price action. This would be an okay place to trade right here. And if you go over one more bar, oops, hang on. Let me do this. Go over one more bar, right there, you would have placed your trade right there. You would have gone short right there at the open of that bar, right? Anticipating that it's going to get this down into the oversold in the next 2 bars, which should put you down here, right? The next 2 bars should put you actually a little bit below that to continue the trend. That's what should happen. Now, I don't know what does happen, but okay, so it pulls back pretty good. You're still in the trade right here, and there it goes. So right there, you might have gotten out of break even right there. It might have given you enough. What is this? The ES. Yeah, that would have given you 4 ticks in profit. You might have gotten out of break even. You might have taken a little profit there. But you're not trading again yet. Okay, so it does get down there into the oversold, but you're not trading again yet. Now you're in some chop here because you haven't put in a lower swing, right? Or a higher swing. So you're in some chop, and then it puts in a higher swing. So right now, as you go through this 1 bar at a time, right here, it puts in a higher swing. So now you have higher bottoms and higher tops, higher highs and higher lows. So now you're in an uptrend. So now you're looking for it to pull back where? Anybody? Well, now you got to draw. You got to draw your tracement, right? So your tracement is going to go from down here all the way up to where the top is. So your tracement is going to be probably right here is what you're going to draw it from. Up to where the top is to find your retracement level. Okay. Now, right now, the top is right there. I don't know that that's going to be the top, but that's where it is right now. So if you keep going with this, so the top goes up a little higher, it goes up a little higher, so the midpoint is a little higher, right? So now it's pulled out of there, right? So you're now looking at that as your tracement, right? So if you go over, oops, move that over. Well, I guess we can leave it right there. Go over another bar, you start pulling back. You're not in a position to trade here yet, right? And what I'm thinking right here, at this point right here, we're right here, okay? We're right here with this down close. I'm thinking, all right, well, the next bar, if it gives us a down close, if the next bar gives us a down close, it's going to be right here, right? You're not exactly at support yet. It's a point where you could take the trade. You could be aggressive, take the trade. Your stop is going to be down here below that level, and you have a pretty good move, pretty good spot where you can move to move your stop to break even and take some profit if it continues the next leg length this big. All right. It's not exactly at the midpoint when it's pulling back. That's if it were to give you a down close. I don't think it does, but if it did give you a down close right there, that's what I would be thinking. All right, right there. And it gives you an up close anyway. So the next one, if it gives you a down close on the next bar, your down close is going to be right about here. All right. I don't know if it's going to go into the oversold. If it does that, because of where it's positioned right now, it might stick it in the oversold. It might not. If it does go into the oversold, then that right there might be a place to do an aggressive trade. Do you see that? 59.10. Yeah. Okay, that's good. You guys all got it right. So the if we get a down close and it goes into the oversold, actually, if it gets a down close from here, it's not going to be at the 50% retracement. It depends how close it is to it, whether it would be a good aggressive trade or not. right? If it's too far above it, then it wouldn't be a good aggressive trade. Um, but let's just see the next bar. Okay, it's right there. That is too far above it to do an aggressive trade because your stop is going to be right there at the 50% retracement. So that's too far above it. You wouldn't want to do it right there. It didn't go into the oversold anyway. So the next bar might be the one. The next bar might go into the oversold and put you right at that 50% retracement. Nope, the next bar didn't put you there either. Okay, so at this point, I would probably say I don't really want to take this trade. That's probably what I would say. All right, you could take it, but an up close on the next bar is going to put you right here. All right, an up close on the next bar will put you right there, and the swing high is right there. So I would probably say right now I don't want to take this trade. I'm just going to skip it and wait until something comes along that's a little better. If we go forward, the next bar does give you the up close. It is right there. It's not the greatest place for it. It does give you enough to get your stop to break even between here and here. But your stop is going to be like right here. Right there, right at that 50% retracement. Okay, so I'd probably skip that one. And it does go enough to get you some profit. Get the stop to break even. Puts in a higher swing. So now you start it all over again. You start the whole process over again. Comes down. You're almost in the oversold down at the bottom. You're almost in the oversold, right? The next bar is not going to pull back very deep. It does put you in the oversold. So I'm not going to take a trade right here. I'm going to wait until it goes another bar down like that. That's a better spot to trade right there. I would say, okay, if we got an up close on the next bar, then it'd be okay to take a trade. You don't. You go all the way back down. You're at the 50% mark right now. This is the 50% mark of this leg. All right. It's not the 50% mark of this leg. That's the new leg. You see that? So, I'm sorry. I just spent the whole hour talking about trading rather than actually taking trades. Sorry. I know I said I was going to do live trading, but I only said a half an hour live trading. And so far we've taken 4 trades. And we're actually negative overall just a little bit. I'll get another trade in there. We have another half an hour here. I'll get another trade in there. But this pulled back past 100% right here, right? So now, if the next bar were to give us an up close, then I would consider taking the trade because you'd be above the 100% retracement, right? So you'd be on top of support if it were to give an up close. But if the next bar doesn't give an up close, then then you're just waiting, right? And this is not the right thing. Click on this, and the next bar does not give you an up close. All right, so now you have a really deep pullback. So when you break through the 100% retracement like that, and this was something I went over with someone today, if you break through the 100% retracement, you got to think of bigger picture stuff, right? It's already blown out everything that you have here in the smaller time frame. And so what I would do is I'd crunch it up like this and see where it is in the bigger picture. What just happened in the bigger picture? So if we move this whole thing down without doing too much like that, right? This was the huge leg down. This is a 50% retracement of that huge leg down. Bigger picture. So it should go down from here. All right. That's what I would be thinking. I would be wanting to look at the bigger picture. All right. If it blows through all the stuff that you have here on the smaller time frame, then it's time to look at a larger time frame and see what's really going on. And when you can take a bias from that, you can only take short trades from there. All right. I did all this without the background color on. I'm just establishing the trend based on the current price action that we're seeing here. And this was just a random place in the day. This is 3 o'clock in the morning that I hadn't looked at yet. But do you see what this is? How you can use this information? Just knowing what the markets do and knowing what to expect out of the markets is how you can determine where you should have targets and trades that you should take, trades that have better opportunity, trades that are more likely to work out. A little while ago, Ricky asked me, show the trade that you would take every time. Something like this right here is pretty close to it right here. Right? This, if it would have pulled back just a little bit further down here when it went into the oversold, when it went right here, if it had been right here where that got into the oversold, the 50% retracement of that, I'd take that every time. And sometimes I'll accidentally take it in the morning because I'll see it and I know that that's going to be a good trade. And I'll see it and I know it's going to be a good trade and it might not match up with the YBR if I'm using the YBR for my trend direction. Or it might not match up with whatever I'm using for a trend direction. Okay. So, but but the markets are always doing the same thing. And like right in here where it blew through the 100% retracement right there, I would say, all right, well, I want to look at the big picture and see what's going to happen. And when right here you see it's just buried in the oversold. So you're not going to do anything in here, right? You're going to wait and wait. And it comes out, but your trend is, I'm sure your trend has changed here. You were in an uptrend, but I'm sure the background color has changed to red in here now. And so now you're thinking, okay, well, I'm going to look here for it to pull back. But now, now your retracement begins way up here, right? And you don't know where it's going to end yet, but you know it begins way up here. So you're just going to the side now, and now it starts to pull out of here, and it looks like it's headed up, right? So it gets up into the overbought right there. So now you know what you're looking at, right? And you're not likely to get a pullback that's gonna match that right there, right now. Right? It's possible that you could, but the chances of you getting a trade right here with this much momentum on the move down is unlikely. Now, I went over this a little bit in last week's meeting. This right here is the bugle chop, right? Because you have a higher high and a lower low all at once. This usually happens at a trend change point, and this looks like exactly what's happened here. You would expect it to pull back 50%, right? You're no longer looking at this as your area of resistance now. You're looking at this as your area of resistance. Okay? Does that make sense? Once you don't have consistent higher highs and higher lows, or consistent lower highs and lower lows, and you have just this one large move right here, then you're looking at just that large move to find your midpoint, to find the retracement level. Okay. So you go over another bar, it comes out of the overbought. You can take this trade if you want, hoping the momentum is gonna just continue and drag you right down to the swing low at least. You could do that. It's a little bit risky doing that if you want to. If you're up on the day and you want to take a medium probability trade, then you could take that. But better off just wait until it all comes back together. All right. There, you hit the midpoint right there. All right, when you hit that midpoint right there, now, because none of these made it into the oversold, my rules stop me from taking the trade. But that midpoint right there is a great spot to trade. If it were going into the overbought on that up close right there, that, Ricky, is a trade that I would take every time. If we're going into the overbought on that up close, I would take that trade every time. Like right there, I would take that trade. And there it goes. All right, so now it hasn't put in a lower swing. So this right here, some of you guys, yeah, you would be looking, that's right, Rob, you'd be looking for the short if it gets to the 50% mark. Now the problem here is that it got into the overbought without going into the oversold. My rule is that when you're in a trend, it has to go from the overbought to the oversold before you can take another trade. Otherwise, your trend is stopped. Your trend is weakened. And that's what it's showing right here, right? It had more strength on the pullback than it did on the push down right here. By pulling back again and going into the overbought again before it went into the oversold, it was trying to pull back deeper. Now, just a minute ago when it was looking like this, I had no idea where it was going to go to, but I said this right here is what I would be looking for it to get back to. And I was saying a trade that I will take every time is if you have something like that and it pulls back to that 50% marker when it's going into the overbought, that is a great spot to short it. Okay. That's something that I would do every time. Now, it went there, it hit that, and it hasn't put in a lower swing. So right now we have higher lows, right? So it's pulled back up right here. You're back in the overbought right here. So now you have a decision to make. Okay? Because now this isn't your leg length anymore. Right? Now it's this. Right there. Okay. So it works out that the 50% retracement is right there. That's a perfect spot. That's another one right there that I would take. Is my price data is from TradingView. It's from TradingView, John. The question is my price data from TradingView, is it from some other place? It's from TradingView. It's $7 a month. So, you know, most other places, I know StoneX charges way more than $7 for me to get the data straight from StoneX, and then I got to get it from StoneX. You know, if I get it straight from TradingView, it's better, and it's worth $7 any day of the week. But this right here is another one right here, the same thing, right? This is exactly the same thing. It pulls back up to that midpoint, and it goes into the overbought at the same time. So this is kind of the thing I was looking for earlier, Ricky. When you asked me that question, I was looking for this scenario right here. This is a trade I would take every time, aggressively. Okay, I'd sell that right there every time. And I'm doing all this without having the background colors in here, right? So I don't want you to be thrown off by the background colors, right? So I take that trade every time. And what I'd anticipate is that it's going to get down here, right? This is my first area of support. And then the next area, remember what I said about the diamond principle? It's this times 2, right? Why is that times 2? Because that's exactly what this leg length is right here, right? Remember the diamond principle is to go from here, from this to this is your price element, and from here to wherever it goes down to that level is your time element. So it's twice that amount. Okay, so I'd expect it to go this much further. From here to here, it'd be like down here is what I'd expect that to get down to. All right, exact numbers, it'd be 911 down to 905, 6 points. So it'd be 6 points from the entry point up here. 908 down to 902 is what I'd expect that to get down to. Okay, as far as setting targets, that's what I'd expect out of that. Now, I don't know what it does actually do, but there, 902, bam, just like that. That's the diamond principle right there, right? That my bid ask is faster than yours, even with zoom latency. You're talking about on my DOM, or you're talking about this stuff that's going on over here, John? Okay. Well, the stuff that's going on the chart is straight from TradingView. The stuff that's going on here is from StoneX. Okay, so now that you have that, that was the whole diamond principle right there, in perfect harmony right there. It did everything that you would expect it to do. All right. All right, so let me go to the end and see if we have any trades that we can actually take right now. Okay, I feel like we probably missed a couple in here. Everything that I was just talking about probably just happened in here a couple of times. Let me get rid of some of these so I'm not walking all over myself. All right. Let me put the background color back on there if you want. Oops, not that one. Hang on, this one. All right, so right here, if this bar were to close up and get this into the overbought, I would sell it right there. That's a pretty good spot right there. I don't think it's going to make it all the way into the overbought, but if it did, it would be a good spot to sell. All right, it'd be 50% retracement of this leg right here. It didn't do it, but that's what I would do. Okay, you still have a chance right here because that last one didn't close. It didn't go down on the down close. It's not going to work out though, I don't think. The gold over here, let's remove that and remove this. And on the gold right now, we don't really have anything there. Oof. How do you get sound? Everybody else has it. I don't know how to respond to that. I guess I can do it in here. I can do that in here and do send. Just send there. Okay, that was David. I haven't seen that David in a long time. Alright, so we really don't have anything happening right here. We turned into some chop right here. That's kind of junky. right before the meeting today, my niece who rides horses, she like jumps horses and stuff like that. She got this horse stopped right at the gate and threw her, and her leg got caught in the stirrup, and it turned around and it spun her leg around and it kicked her out of it. Man, I don't want to know what her knee is like right now. But, oof. Can I draw a fib on the ES for educational purposes? Can I draw a fib on the ES for yeah? The retracement, you mean? Because I'm staying away from calling it a fib. All right, because it's just a retracement. I'm using the tool, the Fibonacci retracement tool, but it's just a retracement. Right, 50. I'm looking for 50%. That's not even a Fibonacci number. But the way you'd be drawing it here, because it's a red background, you'd be drawing it from the prior swing high, which is going to be right here, to the current low. All right, before it goes back in. Before it goes back into the overbought. So this is what it'd be looking like right now. Right? That's why a minute ago, if we were going to get an up close there a minute ago on this bar, I would have been looking to short it right up there if we're going to get an up close, but it didn't happen. It just went into some chop. Okay. And still looking for opportunity. We could have something here on the gold. Nope. It's going to close up, not down. I was going to say if that bar from here where it was would have closed down, we would have been at a good point right here in this leg. But we should be actually looking from way down here on the gold. But this is what the markets have been like today. They've just been tough. Charles H. Charles H. You never did give me a valid ID. You know, I didn't let your payment go through just in case you didn't notice. And Ernest, you still, I know you're working on that too. But neither one of you, I didn't let your payments go through because neither one of you gave me a valid ID. So you guys got to work on that. The ID that I have, right, because I'm premium, mine is over here on the left. This is the ID right here. If I were not premium, if I were just essential or basic, I think the thing would be right here in the middle. But it's going to have something. Like if you don't have an ID, you don't have a name associated with yours or an icon associated with yours, it'll probably just be the first letter of your ID. So Charles, yours might be a C, and Ernest, yours might actually be a D, depending what your ID is. Okay, knowing what your email is, they might make your ID based upon your email. If you don't create your own ID, you don't tell it what you want to use, then it creates one for you. Okay. Alright, so we're finally getting some movement here. Now this whole thing right here, the retracement that I just drew on the ES, we're going from here down to here, right? So this is too far of a pullback. Now right here, I was just going to say, right here I would consider shorting it, but it just gapped up. What the heck? What time is it? 3:50? It just gapped up there. I was going to say right here I would consider shorting it, but it came out way over here, so I'm not going to do anything right now because of the gap. Let me show you guys one more time. If you haven't taken the free trial and you want to take the 4-day trial, go here to tvtrades.com/4days, just like this. Okay, tvtrades.com/4days, and sign up for the trial there. Copy. Okay. I'll put it in here. Paste. Send to all. If you haven't taken the trial, you want to sign up for the trial, just go there. All right. Make sure when you sign up for the trial, you give me your ID. There's an email that gets sent out to you, and you have to give me your ID. All right. I can't set you up if you don't give me the ID. All right. All right. So we have gaps here and here that need to be filled. Just like the last time, they're both just about giving us trade setups. The ES did give a trade setup from right here. All right. The last one, I don't remember if the ES gave the trade setup the last one or if the NQ gave the trade setup. I think it was the NQ. But the ES is giving the trade setup this time. And here it is. My stops at break even on that. I'm going to lock in 4 ticks on that. I'm going to lock in 8 ticks on that. we're out with 8 more. All right. So I'll put that right there. Now that was a conservative trade off the 100% retracement of this leg right here. Right. I know that it's supposed to go all the way down here, but it was off of this leg right here, where it came out of the overbought and went back into the overbought. I'm sorry, it came out of the oversold and went back into the oversold. This. What was I saying? Yeah, it was this leg right here. The 100% retracement of this leg is what I was looking at. I wasn't looking at the whole thing back here. And the NQ didn't pull back deep enough to give us a trade. Okay. Was 59.05 was where it came out of the overbought on the ES. Hang on. 59.05 was where it came out of the overbought on the ES. 59.05. You're talking about back here? Let me just look at the ES. Again, I do live trade sessions in the New York session. New York session. In the morning. I do it in the morning. I trade every day. But can I do it in here in the morning? You know, this spreadsheet has my results of trading in the morning every day. These are my results of trading from 9:30 to 11:30 every day. You know, last month we had a really good month. This was our best month. Last month, $35,530 with one contract. You know, I trade 10 contracts, so it's actually 10 times that for me. But with one contract, that's what it was last month. I averaged $1,870 per day per morning session with one contract last month. Last month was a really good month. This month is not anywhere near it. Right now we're averaging $986 per contract per day. And we're halfway through the month. But, well, I do it every day. You can take a trial there if you want to and watch that. It's not exactly the same, but it's using the TV Trades range trigger. I use that every day. But I also use that and that. What we do in here is easier, I think, and more precise. What I'm doing here with you right now. Okay, so you're in the trial on that. Okay, so you see that. But I can't mix this in there because this is different. This is just me, and that is not just me. Like, this is a good spot right here. We can't take it right now, but this is a good spot right here. If it pulled back, if you got a down close on this bar, that would be a good spot. Coming out of the oversold right here would be a nice place. Right there would be a nice place. All right. Now, following my own rules. Because this one didn't make it into the overbought right here, you wouldn't want to take that trade. All right, because this one didn't make it into the overbought. You'd skip that trade. Okay. I'll send you an email, Rob. Okay. About that one. It's different. It's not TV Trades. All right. I use a TV Trades range trigger in it, but it's not TV Trades. Okay. All right. So it is 3:55 now. Right over here on the gold, a good pullback spot. A good pullback spot would be right here. It could happen. All right, a down close on this bar, a down close on the next bar. An aggressive entry right here would be good for me. All right, so we'll bring the DOM over, and if it happens, I'll do it. The way it's just moved up a little bit right here, that's going to make it a little less attractive. If this bar closes up, it's not going to happen. It's not going to happen. So what could happen, now that that didn't happen, what could happen is we get a down close on this, it puts it in the oversold. We get a down close on the next one, it puts it flat in the oversold. and then we get an up close on the one after that, and it comes off the midpoint between here and here, and that would be a decent trade. Okay, that's what could happen here on the gold. Now that the trade that I wanted to have happen didn't happen, the next most appealing trade to me would be what I just described. Over here on the NQ, we didn't fill that gap yet, but now that we've moved up this far, filling the gap would be a pretty good entry point. You'd have the same kind of scenario. You'd have to have a couple of down closes, get this in the oversold, and flatten out down here in the oversold, and be able to take a trade off of that. Okay. Does anybody have any questions about this? I mean, the indicators themselves. I mean, if you take in just the arrows, if you just taken the arrows, over here, this one wouldn't have worked out. This would have worked out just fine. You got up to that prior swing high level that we talked about, right? This one here, you would have been looking left from here. This is the prior swing high that you would have been looking for. So it didn't get there yet. The bearish arrows, this would have been the first level. This would have been the second level. It got to both of those. All right, it didn't get to the third level, which would have been down here. So if you just taken the arrows are working out okay. You see how when the arrows, sometimes they go back and forth really quick like that. There's a thing within the TV trades called the bias. By default, it is off, right? But it's right here, enable bias level. And if you do enable the bias level, I don't know if you just noticed, if you do enable the bias level, it's going to eliminate when it goes back and forth like that. So it's not going to give you trades in opposite directions, one right after the other like that. Right? What that basically does is it says this is a simple moving average, this number. You can make this whatever you want, but it'll say anything above that simple moving average, any long trade above that simple moving average, it'll give you a long arrow. Any short trade below that moving average, it'll give you a down arrow, but it won't give you any arrow where it's not on the right side of that moving average. Okay. So if we go back here right now, I was looking to see if we are going to get a pullback on that. We didn't get the pullback yet. What market is this? 31.81. This is gold. Right? So we're back here on the gold. We're almost in the oversold. It's going to have to take a couple of bars down there in the oversold and go flat down here in the oversold to get down to the point where I'd want to buy that aggressively. All right. We want to see this pull back a little bit. This right here is at a good spot. If this went into the overbought, I would sell this right here if it went into the overbought. All right, down here at that point, I would have sold it at the open of that bar if it went into the overbought at that point, but it didn't. I want to get another trade in here if we can. See, this is just messy right here, right now. There it is. Now that it's 4 o'clock, so it's gonna start jumping around right here, right at 4 o'clock. Not the optimal time to place trades right here. All right. Well, guys, it was not near as successful this time as it was the last time. We're actually down a little bit on the session. That NQ stop out that we had, we didn't get it all back. If I would have taken more profit on that one trade that we had, then we'd have gotten at least back to break even. But right now we're down, I think, $50, right? No, actually we're up just a little bit. Hang on. We have 16 ticks on the ES, that's $200, and we have minus 36 on the NQ, so that's minus 180. So we're up just a little bit. We're up $20, I think. Let me just put it in the spreadsheet just to make sure. Right. On the ES, we have 16. On the NQ, we have minus 36. So we're up just a little bit. We're up $20. So there's a lot of talking, though. It wasn't a great day to be trading, and it was a lot of talking for me today. We did end positive, just barely. But we took 5 trades. All right. Again, if you want to take the free trial, you can. It hasn't been a great day for trading, for trading overall. As you can see, this 450 was my lowest day this month, and lowest in all of last month, and lowest in the month before that. And you go all the way back to February before I had another day that was, here was February 11th was the last time I had a day that low. So it is what it is. That is it, guys. I'm going to wrap it up here. I've been talking for an hour and a half, and this is just one part of my day. If you haven't taken a free trial, go to this tvtrades.com/4days. This recording will be emailed to everyone. All right, it'll all be sent out to you guys in an email after everything is all done. Thanks, Mark. Yeah, it's gonna be a long time. She's going back to the farm. And, you know, she just graduated. It was her graduation that I went to a couple of weeks ago, or last week, I think. It was her graduation that I went to. And she just graduated. She just started working in some vet office, and now she's gonna be hobbling around for probably 8 weeks. Alright, I will send you that link. I'm going to stop the recording right here, okay?